Good morning, America. Good afternoon from Germany. Here's Pascal again, and it is Thursday. We will have some numbers today, initial jobless claims, and from the housing market. And ECB will declare its new interest rate, but this will be after my stream is finished. But we will look at the US markets and see where we are pre-market. So let's start right away because we had the news yesterday. We were already talking about Credit Suisse, the Swiss bank, which had some problems yesterday, and therefore the market went down, but it went up again, and you can see we are trading higher again the fourth consecutive day now. So yesterday, really nice candle here on Nasdaq. We had lows of 11,971, but then we managed to close higher. High point was 12,280 and the closing was near the high, 12,247 points. And today we already hit the 12,300 level. 12,332 was the high this night during the Asian session, and we are trading right below the 12,300 level right now. As you can see, there is the next Fibonacci level sitting here at 12,375. I already lowered my position size and cut half, so I still have small position left. I want to close out right here at the Fibonacci level or a little bit earlier. And yeah, here you see the parabolic SAR. So it's in a downtrend right now on a daily time frame, but as soon as we close above, it will turn again to an uptrend. But it can also act as a resistance here, so 50% Fibonacci, and this parabolic can act as a resistance. So therefore, always be cautious here in this area. Therefore, I want to be out of all my longs. Maybe I'm too early to step out of my longs because it's looking good in terms of the daily candles here. But because there was a previous high here, I don't want to be too long in this long position, and I would rather wait for higher levels to short again here. So let's see the news today. We will have building permits in about 12 minutes, initial jobless claims, and Philadelphia Fed Manufacturing Index. So it will be interesting to see if the numbers can be weaker than expected or higher than expected with initial jobless claims. This will fuel the rally, like we have already seen yesterday with PPI and the day before yesterday with CPI, which was in line and PPI lower than expected. This is good in terms of interest rate expectations and inflation expectations. So lower inflation expectations mean lower interest rate expectations, and this is what we will look at right away. Here with CME FedWatch tool, next Federal Reserve meeting is in 6 days, next Wednesday, and here we see the big shift from 1 month and 1 week ago from these 75 basis points back to only 25 basis points or even zero change. The 38% are expecting zero change, and 62% are expecting 25 basis points rate hike up to 5%. More interesting is for the next meetings. So there was the biggest shift here because now the expectation shifted to 5% as a high point of the interest rate level. So we will stay there until June, and in June there will already be the first lower interest rate level here. As you can see, 25 basis points lower, so they are less steep, these steps here. We had 50 basis points yesterday as expectation, but you can still see that at the end of the year the expectation is around 4%, and then lower interest rates during the year 2024. So it completely shifted from a high point of 5.75% previous week to a high point of 5% this week, and lower interest rates this year. We hadn't this expectation in the previous week. So because of the bad news from the banking sector, there was a complete shift, and it will be interesting what the European Central Bank will do, because in about 55 minutes we will have the interest rate decision from the European Central Bank. I hope they will stay with 50 basis points, because if they will go lower by only 25 basis points, this would mean that they are not focusing on targeting inflation anymore, but they want to save or rescue some banks, and it's not their main target, not their main focus to save the banks. Their focus should be on inflation, especially because Credit Suisse is a Swiss bank, and Switzerland doesn't have the euro, so it's not the same currency. They are not in the same currency, they have their Swiss franc, and therefore there's no need for a 25 basis point move, in my opinion. They should stick to the 50 basis points which are expected by the market. And because we have still higher inflation than you in the US, we are still around 8% inflation. We need these high steps here to the upside in terms of interest rate. So I hope they will stay, because I think even if they go by 25 basis points, this would only cause a short-term rally, and then we will soon see a sell-off, because this would indicate the fear of the central bank by going 50 basis points, and therefore this fear can also go onto the stock market, and I don't want to see this. Therefore I hope they will stay with 50 basis points here. Yeah, let's have a look at the credit default swaps, because there we can see what does it cost to secure for a default for a bank here for 1 year. So here we can see how many basis points do you have to pay for an insurance for a default of one of these banks. These are mostly European banks, but also some American banks offering services here in Europe, and especially for the derivatives market for certificates. And here we see Credit Suisse. Look at this number, 1,287 basis points. This is just insanely crazy. This means 12.87% that you have to pay for being secured for 1 year. This is just crazy. And just compare it to the other high numbers. For example, Morgan Stanley 110, Goldman Sachs 117, Deutsche Bank 125, Citigroup 117. So these are high numbers if you have 3 digits here. This means more than 1% you have to pay for being secured. But Credit Suisse is more than 10%, so it is more than 10 times. And you see how big the fear is. Even then, because the Central Bank of Switzerland, the SNB, the Swiss National Bank, yesterday said, we will give liquidity to Credit Suisse, even if they're the parent company from Saudi Arabia or wherever they are sitting doesn't have the money or doesn't want to give more money to spend liquidity for Credit Suisse. The central bank in Switzerland will give them, and they will probably need 50 billion to be liquid. Because of this fear, a lot of people are now pulling out money, and they have a lot of wealthy people with high amounts of money here in Switzerland. It is the second largest bank of Switzerland. UBS is the bigger one, but these are the 2 largest banks of Switzerland, and Switzerland is a small country compared to other European countries, and they have just one country with their currency, Swiss franc, and therefore it's difficult to manage for a small central bank like SNB. But yes, that's their problem, and that's our problem for European Central Bank, even if Credit Suisse has also a lot of connections to other European banks. But yeah, this is the fear in the market right now. But I think that the government will step in and will rescue them, because they did in the last financial crisis, and I think they will do it again, because it is too important, and Credit Suisse is probably too big to fail, because there are a lot of connections to other banks here. They will save this bank. Maybe not the bond and stockholders, but for sure they will secure this bank here in the long run. But for now, we still have this fear in the market, especially in the banking sector. But it doesn't affect really the US market, as we can see, because we are trading near the new high points from the previous 3 trading days. So the high point of this week. Now let's wait for the news to see if we can go even higher and see next high. So I will have to redraw these Fibonacci levels here, because I wasn't pointing to the low point here. Let's redraw it to see. There shouldn't be a big move of the 50%, but you see we are right here already at the 50% Fibonacci level. And yeah, this is getting more difficult to get above here. With positive news, we probably can push into this area, but I think this should be an area where we see more of consolidation, maybe because of the parabolic and the next Fibonacci level here at the previous high point. So I think it will be more difficult to get above this one. Let's see. And I have only this small long position, so no big issue for my portfolio size here. Let's go with natural gas before the news. Natural gas is going sideways today, a little bit higher, 2%. But you see we are within the trading range of yesterday. Yesterday we went lower, retested the lows here at about 250 and are now trading sideways here, still below the moving averages. Parabolic is indicating downtrend. Let's see if this Fibonacci level here and the 250 can hold, or if we will retest the previous lows here at $2.26. Crude oil is more interesting because with crude oil we had the big drop here below this support. We were talking about this for several weeks now. As you can see, we retested several times. 1, 2, 3. This was the fourth time, and I told you this time it will not hold. And we break through. We had the breakthrough finally. Then the retest, as you can see, yesterday we retested this previous support area, now is a resistance area. We retested the lower bottom of this area, and then there was a harsh rejection to the downside. Look at this. This was 8% for crude oil. Yeah, there were probably a lot of stop losses here triggered. And today we are trading a little bit higher than the lows of yesterday, but crude oil is still weak. So let's see when some buyers will step in back and trade it a little bit higher, but I wouldn't trade it to the long side because we are now below this major support level, and this will act as a resistance. Therefore, I wouldn't focus on swing trading to the long side. I would look for a smaller recovery here and then take on a short again. So I have no position right now, but as soon as my natural gas position is closed, I will look for a position in crude oil because the implied volatility in the options is significant and is interesting to trade it again. Let's see some stocks like Tesla. Tesla was going back to the previous support level here, which now should act as a resistance right here at the $187 area. So we still have some room here to go higher. The closing was 180, so still some room to go here. $7 to the upside, and then we should see between 187 and 190 there should be a resistance here, and I would look for new shorts here for Tesla because there's still some room here to the 50% Fibonacci at 157 and the lower level here at 145 to close this gap here. But it's just normal to see this recovery here like we have seen in crude oil. Just the difference is with crude oil it happened the same day, and with Tesla here it took about 5 days, and therefore just give it some time until we reach here 187, 190, and then this is an interesting area to reshort again. Like always, no investment advice, just take on your own trades, take your own decisions. It's just I just tell you what I will do and what I'm looking for. So let's have a look at the bond market again before the news come out. Bonds are trading higher because of the lower interest rate expectations. So TLT is rising, as you can see here, back to 107. We talked yesterday that there is a potential high point at 109. We tested the highs yesterday, 107.70, but yeah, there's still some room to the 109. So this should be the next resistance to the upside. Implied volatility is still high, so it's also interesting to trade it with options, but I would wait for the high and then see what happens, and especially what the Federal Reserve, the central bank, will decide next Wednesday, and then implied volatility should drop again. So now to the news. In about 2 minutes we will see the news, so let's go back here and see what the market will do with the news from the housing market and the job market. And therefore this we go to a 1 minute chart in Nasdaq here. 1 minute. Let's just see ES futures for the S&P 500 first, and then go back to Nasdaq. So ES future is trading on a day chart, is trading still near the lows, below the moving averages and far below the 50% Fibonacci level. So there is some more room to the upside, but it's a lot weaker than Nasdaq. We talked about this because this index has 500 stocks in it and not only 100. So the smaller ones are weaker than the bigger ones, and therefore we see more weakness in S&P 500 than we see in Nasdaq. But because I like to trade Nasdaq more than S&P 500, I'm looking at Nasdaq future charts. And we already talked yesterday about the expiration tomorrow of the futures, future options and stock options. So the news are out. Building permits a little bit higher than expected, so more risk of inflation. Housing starts higher than expected. Export price index higher than expected. Import price index also higher than expected, but still negative. Initial jobless claims 192, lower than expected. So more risk of inflation, not really good here, but near the expectation. So it's not too bad, but 192 is still a high number, but lower than the expectation. So a little bit negative, as you can see. So people are still buying and building houses, even if they have to pay high interest rate payments to their banks. Almost no change now. When do we get Philadelphia Fed Manufacturing Index? Numbers not out yet, or just not showing. Okay, and rising again, so this was pretty fast. Markets are strong right now. That's why I don't want to trade the news. Okay, Philadelphia Fed Manufacturing Index is lower than expected. So these news are good for the market. A slowdown here in manufacturing mean lower prices. Like we have seen yesterday, PPI was lower than expected. Producer prices are lower. And they were negative, so we had a deflation here with PPI yesterday. And this is a good sign because this is the first indicator for the next CPI, because at first we have producer prices and then we have consumer prices. And if the Philadelphia Fed Manufacturing Index is already showing a slowdown, then probably we will see lower prices from the producers and then later lower prices for the consumers. And this is a good sign for the market. So we are staying here steady. Good sign. Maybe we can retest the 12,300 and go higher. So yes, initial jobless claims are worse than expected, lower than expected. Housing starts higher than expected. These are not so good numbers for the market, but more important is Philadelphia Fed Manufacturing Index, and this one is lower, a lot lower than expected. And this is good, and you can see the previous number was minus 24, and we are almost back at the previous number. So it's not turning positive again. What are your thoughts on the ECB rate hike? So I think they should go by 50 basis points. Like already explained, in 42 minutes we will know more, and we will see the press conference half an hour later. But I will be in a one-on-one coaching here during the press conference and during the interest rate decision. Therefore, I cannot live stream it for you, but you can watch it yourself. Madame Lagarde will talk in English, so you will understand. And yeah, I hope that she will announce 50 basis points up to 3%, from 2.5 to 3%, because we need this. The inflation is too high here in Europe with about 8%, and therefore we should go to 3% with this 50 basis points move. If they will not announce 50 basis points, then this would not be a good sign for the market, because the focus would switch from the inflation to the risk with the banks, because this could be a sign that the central bank is thinking that this problems with Credit Suisse and other banks could also be a problem for other major European banks acting in the Eurozone. And this wouldn't be a good sign. So I really hope they go by 50 basis points, because the market is already expecting this, and we just need this with this high inflation. So the European Central Bank is already acting at a slower pace than the Federal Reserve, and therefore we have still higher levels for inflation, and we need to come down now. We don't need to go to 5 or 5.5%, but 4%. I think we will need 4% to bring this inflation down. Let's see how fast the central bank will go to this level. Even if we go to 3%, we still have 1% below this target of 4%. And the last time, if we go here to the interest rate decision, the last time we were at higher levels, we can look back here to the financial crisis. Look, we had 4.25%. And now the inflation is a lot higher than back in 2008. So we should be higher than 4%. But ECB took its time, so they didn't start until June to go higher with the first step here. So it was just ridiculous, because they started with 25 basis points, and now they're switching to 50 basis points, but they are still far behind the Federal Reserve. The Federal Reserve is already at 4.75%, and we in Europe here are still at 3%. So there's a big gap between these two currencies, and that's an issue. Yeah, let's see how the Federal Reserve, how the European Central Bank will take its decision, but I really hope for this 50 basis points. Okay, that's it for now. So no big fear right now in the US markets. So everyone is hoping that the central banks can tame the markets and can bring out this fear. Let's see WIX. Where's my WIX chart? Here. So yesterday we had highs near the 30 level again, 29.91. Then we closed at 26, and today we are at about the same level, 26.6. Still a higher inflation, everything about inflation. Still a higher level of fear here from the WIX index than previous week, but you see how fast it went to the upside and how fast it can change within one day. So on some days we see a high fear, then the fear is going to lower levels again, then next day fear is coming down and rising again. So you see the announcement from the central banks turned the market upside down, and everyone is freaking out now because they don't know if there's still a risk or if everything is managed now. So I think it's okay. It's okay that this was the right thing that the Federal Reserve announced to insure all deposits, to not have the bank runs here on the next opening. This was good, but there's still the fear in the stock market because the stockholders and bondholders are not saved. And this is the risk we see here. Everyone wants to be secured and is therefore buying puts or going long WIX. You look at VVIX. No, this is VIX index, Mirko. So I should look at VVIX. Yeah, I can look. So VVIX. Let's see this. I don't have this chart open, but I can bring it up. This is showing us the pace of VIX. So how fast is VIX changing? So let's see here. We are at 122 and the high point was 137. So this is already a pretty high point. When we are at 140 and higher, this is a pretty high point. So let's look at monthly candles here, and you see the previous time we were there was at the beginning of the year 2022 and the ending of 2021 when all this bear market began. You see here we were at more than 140 with VVIX, and so now it turned down during the year 2022 when we had this shift here until August, when we had a recovery in the stock market. We were at low points of about 80, and then until this end of September, beginning of October, we had a downshift in the stock market, and it turned to the upside again. So this index is just indicating how fast is VIX changing, and we now see how fast there was the change in VIX, and now there is the fear that the VIX can change fast, but the change can happen to both sides, to the upside and to the downside. So it's just an indicator how big the fear is really in the market. We had we stayed at about 30 or 28 during the whole year 2021 with VIX, and it was indicating that we see big changes here when we stay above 100, but now it was lower. So the ending of last year and the beginning of this year, we were far below the 100 at the 80 level, not indicating big fear, and now we are back above 100 and even near the 140 level this week. So this is really big fear, and the market participants don't really know where the WIX will be tomorrow and how big the fear will grow. And this is also a risk, especially for option traders, because if you are short an option, then you are shorting volatility, and if volatility is rising, then this is also another risk for you because it is multi-dimensional trading. So if you are long in options, then it's good with higher expectations here in VIX, then you will gain because higher implied volatility means higher prices in the options. Yeah, 140 is panic level, and we are near this panic level. But I would say that above 100 is already, yeah, the beginning of panic here, and we are at 122. So, yeah, almost at the 140 level today. But Wix is not showing this right now because the Wix, where is I overwrite it. So Wix or index. So when Wix is above 30, then yes, this is really panic. We are now in a, I would say, yellow mode between 20 and 30, but we can soon be above 30. As you have seen, we already touched about 2 times this week. So just a few more bad news and then we are above 30. And yeah, the market is still in fear and is waiting for some better news to bring down VIX and to bring up the markets again. And we are trading lower a little bit. Still some minutes until the interest rate decision for the European Central Bank and for US market open. 50 minutes left. So maybe retest here of the lows from pre-market. Let's see the lows. The lows were here. 12,248. Near the 12,250 level. Yeah, this was the low during the Asian session and during the European session. So we should find a little support here. If we go lower than this level, then there's probably more sell-off. But I would wait for the US market to open to have more volume and therefore see the real direction. Because pre-market here is always low volume, and therefore it's not indicating the real direction. It can change pretty fast, like we have seen yesterday. It was the same thing. Pre-market we went lower, retested the lows, and then on market open we went higher and retested the next Fibonacci level. And then yeah, there was a lot of volatility yesterday, retested the highs several times until the end of the trading day, and then we finally had the break, then went lower again, and in the last 5 minutes we retested the highs again. So the market wants to go up, and yeah, we see that a lot of bears are pushed out now from out of their short positions, and this should be again the case today. But I would be more cautious because there is less room to the upside here, because we are in a resistance zone right now. Retesting the lows, and the lows are broken, so smaller sell-off here. Some stop losses are probably triggered, and some scalpers will try to push it back to the breakout level here. You see how fast this can move here when we break the previous lows. And the scalpers are doing their work, pushing back pretty fast. These were 25 points. Dip buyers, wow, this was fast. Dip buyers are doing their work really good. Let's see if they can manage to hold the prices above 12,250. It's still low volume here, even if we see now bigger bars. It's not a really big volume. We still have to wait for market open to see more volume here. It's just because a lot of stop losses were probably triggered here below. Yeah, the March contract will soon run out of volume because it will expire tomorrow, so we will soon have to look at the June future, which is trading about 130 points higher. I explained yesterday why. And this will cause even more volatility probably today and tomorrow. The big expiration, the monthly expiration, triple witching day tomorrow. So we still don't know where the market will close the end of this week. But for now, it's looking good to end the week green. One last minute, then I will close out this live stream and let you trade on your own. Don't forget the ECB interest rate decision in 30 minutes. This will probably bring some volatility to the market. Let's see Euro USD. as last thing, there we had a big drop yesterday. Look at this, 2% down for euro. US dollar got stronger because a lot of people were expecting now only 25 basis points instead of 50. But today we are already a little bit higher. So yeah, let's see how the interest rate decision will come out. And then we will probably see more movements here in Euro USD. So we can retest the previous highs here of 1075 when the ECB will do a rate hike by 50 basis points. And if there will only be 25 basis points, then we will probably retest the lows here and maybe also see a break below. Yeah, it will be interesting, but I will not be able to live stream it here because I'm in a one-on-one coaching. Okay, retesting here, still struggling to hold the levels. Probably wait for market open to see more. I wish you a nice trading day. Hope you had some nice insights. If yes, then please like the stream, and if you haven't done so far, please subscribe to my channel. We will probably see us next week. There are no major news tomorrow, but if there are big news or if an update is needed, I will go live in the evening because I will be on an investment fair near my hometown Karlsruhe. It is in Stuttgart, like every year. Therefore, I won't be at home at my desk tomorrow. But if there's something really important and major thing, I will live stream in the closing hour. Then I will be back home. But if not, we will meet us next week. Have a nice start into your weekend. See you next time. Goodbye.